pound yen. Okay, so this also looks like it's slowing down a bit. Had a few bear days recently. This would have been last week, and I mean today's pretty bullish, but I do think this is coming to an end as well. So I'm gonna clean this up here. We're gonna look at next month. We'll delete all these for now. Just get a nice clean fresh outlook. So we'll move these out of the way, and there you go. So this is our starting point here. I am curious. So this 4-hour moving average, price is still way above it, but you can see it is getting caught up. It actually did break below a little bit here for a bit. Did create a lower low. Now it's pushing back up. So we'll see if it creates a higher high next to this area here. So my main price, we gotta find a whole price to just keep in mind. So the first thing that jumps out here is just 186.50. So we'll put this in here. 186.5, 186.5. And before I do anything else, I want to make sure, oops, bit of a typo here, come on. $186.5, there we go, sorry about that. So 186.5, that's kind of our recent high. And so if we look at these higher time frames here, weekly wise, I mean, you can see last couple weeks having a real tough time breaking 186.5, creating a bit of a liquidity area here. So you can see it's kind of, well, depending on how this week, I mean, there's still a couple days left, Wednesday, Thursday, and Friday. So got the rest of the day and then 2 more days, and we'll see how this closes. If it closes below this level, well, that's starting to create, you know, an upper liquidity area, which is creating a resistance. We drop it on a monthly time frame. I mean, this month obviously pretty bullish. I mean, bullish engulfing for sure. Moved 600 pips, so that's relatively healthy. But you can see if we drag price over, there's some historic areas which price is already in. Price has not been this high since October 15, like 2015. So that's yeah, that tells us a lot. So the chances of pound yen breaking above this are not likely. And then I mean, even if it did break above this, let's say the highest it most likely would go would be 193, which I guess is still quite a ways away. I mean, it's still 700 pips, so you can make some money in you know, in that aspect if price broke above this. But yeah, I mean, those are very historic. Like, price has just not been above this in what, 8 years. So I'd be looking for this to turn around, and based on the last couple weeks, I mean, you can see it's kind of starting to do so. We don't know that for sure yet, so I'm going to delete this zone though, because that'll get confusing for us. So yeah, basically just going to let price keep doing what it's doing for a little bit. You can see there's an area of liquidity here at the bottom that price has respected, and then if you drag it across, it somewhat functions as resistance back here, and then once price broke here, it's functioned as support. So I mean, this area, this 183.50 area needs to be broken, and then I think we'll be looking for a shorts. And I think at the very least, I mean, this pair is going to pull back. So maybe it doesn't go full bearish by any means, but like, it hasn't pulled back in a long time. So even from this area here, I mean, very good chance that price comes back down to between 175 and 172. You can see there's a good liquidity support here, right at this 50% retracement. So I think that's where this could possibly be headed next. Just a nice sell-off for the next couple months, 3 months maybe. Let the pound just kind of do its thing and die off a little bit, to let these yen pairs come to life. I mean, in the sense that, like, the yen is a safe haven currency, so if all the other currencies start selling off and weakening a bit, that's going to prop up the yen. You know, a lot of money is going to move over to the yen in the next few months, I think, just for economic purposes, in the sense that they're becoming less certain. You know, times are becoming less certain, so people move their money to safer things. So that is very common. So yeah, I could see this happening. And so as far as like a trade setup, I'd be looking for price to cross over this, 4-hour moving average. So that'd be step 1. So we'll wait for that. And that might take a couple weeks, you know, might not be next week, but maybe the week after. Just see if this depends. If this starts having a big sell-off, then it'll cross over much quicker. But if it decides to stick around 186, 186.50 for a while and just go kind of stagnant and just kind of consolidate a bit, then it'll take longer. So, but then yeah, I mean, I can see a liquidity area setting up here as well. So see if it breaks that. But I'm in no rush to sell this, but I think once it becomes time to sell, then we'll be laughing. I think, you know, pound yen, all the yen pairs trend really well. So if they're trending, if the trend just switches directions, that's no problem. We'll just ride it all the way down now. And then as far as like figuring out kind of where your monthly range would be for this pair, like this month it did move 630 pips, but it does usually move about 800. I mean, so it's quite a bit. I think we'll probably set it to something a little bit more conservative. So we'll say like 186 is next month's high. And then we will say that 179 is the low for next month, which would give us 700 pips, which is pretty reasonable, I'd say. So that's gonna be our monthly low, and so we'll just see how this plays out, but it might look like something like this, targeting the full monthly range all the way to October here. So it'd be something like this. Obviously dial this in as far as, you know, as soon as we enter the position for next month, you'll just cinch up you'll find your liquidity zone. Let's say it is this zone, for example. This is just for like training purposes, but let's just say this is our zone. And, you know, we enter here, you know, we'll set our stop just above this area here, something like this. And then, I mean, yeah, you might get a really good risk to reward. You might get a double-digit risk to reward. It just depends on exactly where your entries are and where our liquidity area is set up. So, I mean, this is one, and then this is one as well. So if we wanted a safer trade, I'd have no problem going like this. So your risk to reward is still very good. So something like this, you get a much bigger stop, but then you have all these liquidity areas to protect you. You know, you have this is our main one, and then this is our super safe one all the way up here. Keep our stop above both those liquidity areas, be looking real good for next month. And then, yeah, obviously just waiting for price to cross over this 4-hour moving average. And then once it does, what could happen is, you know, let's say our entry's down here, then we can move our stop to like right here. You know, once price crosses over this moving average comes up, price crosses down, we find a retracement, then we can go something like this. So I mean, that's where your risk rewards get really, really good, when you're targeting the full monthly range and you have these areas of liquidity that can protect you. You know, like, so like it's kind of like seller support here and here. So you just kind of place your stops here, and then, you know, once price moves into profit on this position, let's say we enter and price makes its way down here, you know, then you move it to break even. And then you also look for another position. So you start stacking positions, you know, here. Oops, I moved these by accident. Yeah, you start stacking your positions. So then let's say we take another sell position, and then we can move this stop to like this area of liquidity, let's say, if this is our recent one. And then, yeah, you just kind of keep moving down and then keep adding to your main position. And then you end up having 2-3 trades and making a lot of money as they're, you know, each one becomes profitable. You just move it to break even or whatever, and then, yeah, you have way less. You essentially eliminate your risk for the trades, and you have, it's called positive free roll. So you're just rolling in profit, and then you just let the market move and keep adding positions as liquidity areas free up, and as it breaks lower and creates new ones, then yeah, you just keep adding to your position. So that's how I like to trade. Really just consistent and, you know, structured. It's kind of the way to do it. But, you know, as far as setups go, we got to wait till price crosses over this 4-hour moving average. I want to make sure it's really dead. I want to make sure that this pound yen here is not moving up anymore. I want to be real safe and conservative. If I have to wait 10 days, you know, the rest of this week and all of next week, that's no problem. I'll wait. And then yeah, we'll get in on this when the time is right. So I'll keep you guys posted. Let me know what you think in the comments, and I'll see you in the next one.